This
Loans
conference will now be
CA Rajiv
recorded.
Luthia to take today's 30th session of Learning my Profession for the Profession. It was guide to introduce Mr. Rajiv Luthia as Rajiv Jaichand Luthia, qualified as a chartered accountant in the year 1987, qualified as DISA of ICAI, passed LLB in the year 2015, practicing under the firm name style of RJ Luthia and Associate Chartered Accountant since 1987, practicing service tax GST as a specialized field. Delivery talks as a seminar organized by various forums like WRC of ICAI, BCAS, CTC, GST, PAM on the topic of service tax and GST. Contributed to columns of law update in the monthly newsletter published by WRC of the ICAI. Contributed to the column of service tax law update in monthly journal practice by CTC. Author various publication of ICAI, Delhi WRC, BCAS on the topic of service tax and GST, including the background material for certificate course on indirect taxes, background material on modern GST law, guide to GST annual return and audits. Was co-opted member of the indirect committee of the Central Council of ICAI for the year 2010, 2012, and 2017. Was special invitee and convener for IDT Committee GST Group of ICAI for the year 2016 and 17. Presently member of Indirect Tax Committee of WRC, BCAS, and CTC. Was chairman of Indirect Tax Committee of the Chamber of Tax Consultants for the year 2009, 2010, 2015. Number of other their qualification. So here we introduce Rajiv Bhai. Please take down the further session. Rajiv Bhai.
Good evening, everybody. At the outset, my sincere thanks to the Ghatkopar CA study group. This our education is a continuous learning process, and in the lockdown, the spirit has been kept at very high by this group under the head, or rather, you mean to say, a banner of learning of professional by professionals. And in a time span of about 42 days of lockout, this is 13th session, although 13 is not a very good number, but then 13 sessions, remarkable job. Kudos to the organizers, special credit to Charvik and Bhaven, both of you. And my sincere thanks for considering me and giving me an opportunity to share my knowledge on this topic of valuation. Well, before I begin with, I'm sure all of you must be taking a due care of all your near and dear ones to prevent the COVID epidemic. In fact, whole world is struggling. But my best wishes to each one of you, and I hope the things are pretty good at your end. I pray God that let us, the whole world, come out of this pandemic at earliest, and we life be at normal. But let us take this as an opportunity rather than a curse. We could able to do many new things perhaps we would not have thought of in the lifetime, and this is an opportunity perhaps the God has given to us to make best possible use of the time. And one of that is learning the things, on unlearning. A lot of time efforts we can put in the research and the revising our own professional front as well as our non-professional front. Well, the topic today is on the valuation and the issues involved therein. The first is in the allotted time of about 90 minutes of this webinar. The basic things is what I have done. The provisions are also being taken along with the issues there simultaneously. So in my entire PPT, which is about 55 to 56 slides, there are about 9 to 10 issues I have covered, along with the provisions which include the statute, that is law, then the rules, and the some of the clarifications which have come by way of circulars, even the notifications relevant to valuation. Well, friend, the subject is vast, and then secondly, this is webinar, not one-to-one like in seminar we can see and ask frequently. Here, webinar has a different rules. So, of course, you have any queries through the chat, I will able to, or you can forward it to Charvik or Bhaven, and it will come to, and I'll be able to deal with the time permit as the case may be. One or two other thing is concerned in my presentation. I have taken one or two AR. In fact, let me be upfront, tell you that AR is one which I don't rely more. I don't find much with the reasoning, and even the justification and even the views are concerned are not very convincing. And lastly, it doesn't have much legal sanctity of the law also, except it is binding on the party. It is not binding on all of us, but one or two AR I have taken or other dealt with during my presentation, just to give idea that what kind of mindset or thinking is there, and what kind of interpretation we are going to face in the future while dealing with the litigations in the time to come under the GST on this topic. Well, friend, with this, let us start with the proceedings on this. Uh, what I have covered is section 15 is the only section which deals with all the provisions here is picked up from CGST Act. So section numbers are relevant to CGST as well as the CG rules. So section 15 is the one of CG, then 27 to rule 35 of CGST rules. And then issues which I have covered under valuations are dealing with some of the aspects which are covered here is sole consideration, then notional consideration, discounts, incentives, free supplies, bad debts, gift vouchers, coupons, cross charge between branches, grants, subsidies, etc. So this is why, by and large, these are the areas which I have dealt with in my presentation today. Let us start with the first and foremost section, and which is a prominent section, section 15.1. The bare verbatim of the section I am not, but what are the crux of the sections? I am trying to explain that. What 15.1 says specifically the value of supply of goods or services, where the price is sole consideration. Please mark this word. Only when price is a sole consideration and supplier and recipient are not related party, both should not be related. This section will be applicable only for where the supplier and the recipient of a recipient are not the related party. Then what is value is a transaction value. Transaction value, this is, it looks very simple to the extent one liner definition means the provision, but that's not that easy when it comes on the interpretation part is concerned. So this is what section 15.1 is concerned. There are 15 section has got 5 sub clauses. 15.1 is a definition of what is valuation. It defines what is valuation. 15.2 says that while valuing, what all you have to include over and above 15.1. 15.3 says what is all you are not supposed to include or what you have to exclude. So 15.3 say what you have to exclude. 15.1 is the first value. 15.2 you add to that value. 15.3 you eliminate those items from the value. 15.4 says that notwithstanding anything stated in 15.1, 2, and 3, there is a when the you need to go to the valuation rule in certain circumstances. And 15.5 is specifically for certain transactions of a supply, like forex brokers are there, forex traders are there, or certain air booking agents, etc., insurance valuation, etc. For this, there are specific rules that comes in 15.5. This is in a nutshell is section 15 stands for. Right now we are on 15.1. Now, having understood this 15.1 concept, now we'll go to our first issue. I have taken the issue immediately relevant to that provision so that you'll able to connect to the provision to some extent. Of course, while doing, there will be some overlapping coming up, but then I tried my best to that extent. So first issue is, say CA Hemang Shah has let out his office premises, which is located at Ghatkopar and having area of about 5,000 square feet, and he has let out to Tata Tea Limited. The name itself says that they are not related party. That's first mean Hemang is giving his office on rental to Tata Tea Limited. He has collected a security deposit of 5 crore rupees for this letting out of this deposit, and which is an interest-free security deposit. And then over and above is taking monthly rentals, which is 1,50,000 rupees per month. That is about 30 rupees per square feet is a rate kind of a thing. And now next fact of it is the rentals of the office premises in similar area or vicinity is around 100 rupees per square feet. So what Hemang is charging is only 30, as against that the market price there is about 100 rupees. Okay. The GST officer while investigating came to this issue, and they said that yes, there is an undervaluation happening. The supply is not valued properly. You are paying tax GST on 1,50,000, whereas the rent you could have fetched is 5 lakhs comparing with the other similar office. So GST officer has issued SEN to him, and there is an allegation that rent is charged, or rather rent is valued lower for avoiding the GST liability by Hemang, and the same should be compensated. Same is compensated by Hemang by way of taking a higher deposit, because 5 crore is very improportionate deposit. That's what is his allegation, and the deposit is interest free, which obviously some interest Hemang may be earning on that by investing that money in somewhere or other place. So that is how the rental is compensated, and GST liabilities ought to be evaded. This is what the structuring of the transaction Hemang has done, is the allegation by the GST officer, and the show cause notice has come. Now we need to discuss the valuation. I hope the queries by and large, this flow is proper, and you all of you must be getting what I'm trying to say. Now what we have to say is the valuation. What is the correct value? Is it a 1,50,000 or 5 lakh or something else? And in this, how it will be defended by Hemang while dealing with this litigation. Now let us go to again section 15.1, the earlier slide. What it says that the valuation is what? When the price is the sole consideration and both the parties are not related, then the transaction value is the value. That was the earlier slide 15.1 section. Okay. So now here party is not related. That's fine. The transaction value is 1,50,000 as of now, as per the agreement. Only thing is that when price is a sole consideration is the one on which this issue comes. In this example, is it a price is a sole consideration or no? Now, what is mean by sole consideration? The term sole consideration is concerned that for the purpose of supply, what is coming to the supplier, either from the recipient of supply or anybody else on account of the transaction of supply, will be the consideration. Fine. Now, in this case, what he is getting is a rental of 1.5, but over and above, he is getting interest-free security deposit. Of course, the deposit is refundable, is not a consideration, but the interest portion, then, which is, we call it as a notional kind of the consideration is coming up. That's the allegation. So whether that notional will be also added to the valuation or no is the one which we need to look at, and the allegation goes this way. So price is a sole consideration is the issue over here, whether it is there or no. Now first is before going further in the analysis of this part of it, one very important rule which I would like you to draw your attention to is rule number 28. Now rule number 28 of CGST, where there are two provisos are there. In the second proviso of rule 28, what it says that where there is a recipient is eligible for full ITC, where recipient is eligible for full ITC, the value declared in the invoice shall be the open market value of goods or service, as the case may be. So when the buyer or the receiver of the supply is eligible for ITC, whatever value declared is deemed to be the open market value. Now in this case, the Tata Tea obviously in the business, and we presume that it will get credit for the ITC of GST paid. So this is one. So rule 28, whether rule 28 will save this or no. But first thing is that rule 28, if you look at the heading of rule 28, rule 28 is not applicable to each and every case, but it is applicable only for value of supply, which is between distinct or related person. Mind well. So rule 28 has no universal applicability. It is applicable only when the transactions are with the related person or distinct person. Now in this case, the Hemang and Tata Tea is not at all related person first. And what is distinct person? They are all defined in 25, 15, the sections are concerned. So distinct related person, there are a list of the, which in my subsequent slide, you will get it. Of course, you can refer the definition also. And the distinct person is nothing but a branches of the same entity. So company has got 10-15 branches in different state, and if separate numbers have been obtained for each of the branch, they will be distinct person. Now whenever the transactions are happening between related and distinct person, you can go to the recourse you can take of this rule 28. In this example, we will not able to take the recourse of this. So that is one I would like to draw attention to this point. Secondly, in this example, since I am changing the slide, one more offshoot issue I am writing here. In the same example, had this premises was given by Hemang instead of Tata Tea, if it have been given to Tata Hospital for running the hospital, discuss the valuation. Why I put this alternative question is Tata Hospital is the one which providing medical service and not paying any GST on that, since it is exempted. And when the supply is exempted, they will not get ITC absolutely of this tax. And when ITC is not get, there could be a view coming up that they are not hit by Rule 28, because Rule 28, in any case, I have explained Rule 28 is not applicable because it is limited purpose. Its applicability is only between distinct. But still, by way of given this twist, I have given the example that even Rule 28 will not save. So what will, whether the value, if it is been Tata Tea or Tata Hospital, in either case, whether the valuation is correct or not. This is what the question and the issue involved is concerned. Now we'll go with my views, etc. Now the here what is trying to be department's allegation and show cause, they want a tax, and they say the value is not correct and there is undervaluation. And to what extent? To the extent of the deposit taken unreasonable amount at unreasonable value. And when the deposit taken, what is it is compensated by way of interest. Okay. Now, so to that extent, interest should be the nothing but it is in lieu of the rental. What is coming up is interest. That's what the department is trying to allege. We are not going in the quantum and all in the show cause. Now, similar issues have crop up, and the matter has come up before the tribunal in the old regime of service tax. If you look at the provisions related to service tax payable on the renting of premises in the old regime, as well as what we are doing is today in GST payable on the supply of renting is concerned, provisions by and large are concerned, we have by and large same provisions by and large. Now in that regime, what was happened, that let me tell you, because under GST we have hardly any precedent except all the decisions in GSTs are concerned by way of writ when you challenge the law. Otherwise, matter of yet to travel to the tribunal level in GST as of now. So we have only from the old law we can take some precedent. Now, the first of its kind is concerned, you take an example of, the case law. It is a Mumbai Sistat decided way back in 2014 in the case of Murali Realtors. Let me tell you, in this case, there are about 6 or 7 appeals were there, and all the matters have clubbed together and they have come for the, and the order was pronounced common. So, Murali Realtor is the only one name I have mentioned. There are other 6 or 7 matters that are also been covered. And in the year 2014, this where what courts have pronounced in this. Now here in this, the background is concerned, entire case law is the similar type, the deposit was taken at a very higher amount and the rentals were very low amount of rental, similar to the facts which I have given were involved here. And in the service tax regime, the show cause has to be issued. The show cause was given, and in the show cause notice, of course those days the section 67 was a valuation section, etc., etc. Fine. Now there they say all the facts they have given. The allegation is concerned. Department says that the rent was not as up to the market price, and that's why 18% of the deposit amount, which is interest rate they have considered, and which was tried to be added to the valuation, and service tax was sought to be recovered. That's one. Now, when a matter was argued before a tribunal in this case, the tribunal has said that in the entire show cause there was allegation was there, we agree, but there was no evidence adduced by the revenue that the by taking this high security deposit amount, it has influenced the price. The price should have been influenced. Those kind of, not only the allegation should be there, but there should be some evidence also they should have been given. So of course each case has to be based on fact to fact. So here the evidence was not there. That's one. Secondly, in the tribunal, they also further in this particular decision it is stated that 18% department trying to recover is otherwise also very unreasonable. How they arrived at 18%? Because 18% is not the rate of interest. Otherwise, also under the government statute of the taxation, as well as on the bank rates or the borrowing rate. So that is also arbitrary, and it has been stated that what is section 16 says the amount charged. So what was charged is very important, and that could be the only value of service tax. Now in this case, notional interest, thereby tribunal has pronounced notional interest on the interest on interest-free security deposit cannot be added to the rent which is agreed upon between the party for levy of ST, and the entire matter was decided in favor of the assessee. It was against the department, no tax. While arguing this case, one of the interesting arguments by the counsels which are there in the case law, there it has been stated that Suppose the premises is given on a rental basis to a tenant. And in the agreement, it has been stated there's a condition given in the agreement stating that it is the responsibility of the tenant to keep the premises in a good condition, in proper repairing condition, etc., etc. If the responsibility is a casted, suppose, is on the tenant, or in the second agreement, similar type, if it is stated that it is the responsibility of the landlord to maintain the deposit. So in both the cases, the amount of rent is concerned will be different. Now in that case, they say that if the tenant has agreed to such obligation of maintaining the premises, and thereby can you say that the compensation therefore which has been given by the tenant to the landowner or the premise owner is lower to that extent? Now, that is not possible, and if that is not possible, one cannot say that there is a notional rent coming up. That's one. Secondly, in Mumbai High Court, in one of the case under income tax, that was CIT versus JK Inverter, it was held that that was vis-a-vis the rental income from house property, where it has been stated that even for the purpose of section 23 is concerned for computing the property income, the notional interest on security deposit should not be considered for the purpose of calculating actual rent. Okay, there are mechanism given for section 23, you need to compute, but actual rent is the only amount which he got it. You can't add any notional rent to that. These are all the observations while dealing with this case. Similar views were taken by Mumbai Tribunal in other cases also, and one of that is a multi-model storage solution private limited in 2018, and wherein they relied upon the earlier that Murli case what we have stated. And of course it was a different judges, there is no distinguished. Of course the facts are concerned by and large same, but only thing the allegation or iota of the deposit influencing the rent, the allegation to the extent there was a difference. But here also the tribunal went on to held that notional interest, it cannot be added to the rent and there cannot be any liability, and they relied upon the same decision earlier Murli, and in the Murli's case this Magarpata township was also held, so it was clubbed case and they relied upon. So in nutshell, in my view is concerned relying upon the same, taking the same analogy over here. There is no other provision under the GST. Section 15 is the only section whereby 15.1 is very clear. 15.2 says what all you need to add, and 15.3 is what all you have to exclude. And 15.4 says that only when it is not possible to compute the value as per 15.1, then only you need to go to the rules. Now in our case, 15.1, we can very well compute the valuation. So in my view, notional interest cannot be added to the valuation, and the tax paid is 1,50,000 in this case is correct GST. This is my view on that part. The price is a sole consideration. There is no precedent under the GST Act, which is can we say here 1.50 lakhs is the price is sole consideration? I'll say yes to that extent. There is no precedent available under GST. I told you already. But let us go and look at the other statute for this, because valuation under service tax we have seen the decision. Look at Central Excise Act. Now in Central Excise Act under section 4, in the old regime, why we are taking the base, because GST precedents are not that we need to take a support from the old law, and GST is a substantially subsumed of VAT, excise and service tax. These are the three major laws. Now under section 4 of excise, the valuation, it says that when the goods are sold by the assessee for delivery at the time and place of removal, and the assessee and the buyer are not related, and the price is sole consideration, then such price would be the transaction value for valuation purpose. If you look at the wordings and if you try to compare this with the section 15.1, by and large you will find there's a uniformity by and large. So in that case also there are decisions, and one of the decisions over here is of the Bangalore under the Excise Act, and where the price is a sole consideration, whatever is amount is being charged is accepted as a value on which you need to discharge your GST liability. So Coromandel International Limited is one of the citation. There are quite a few other decisions also based on the fact. And let me tell you also there are a couple of few contrary decisions also on this issue under the Excise Act, but the matter is still pending before the Supreme Court in this. But tribunal, so far so good in couple of cases, are in favor under the excise regime. So this was about the first issue of price is sole consideration. With this, we'll go to the second the provision 15.1 we have dealt with on this part. Uh, Now the second 15 section 2 subclause 2 says that whatever valuation you come to 15.1, you need to add certain things to that, and that is what 15.2 in your transaction value. What are those things you need to add? First is price actually paid or payable. So that is what the amount which you have charged in 15.1. To that you need to add all the taxes and duties. You need to add to that for arriving the value, except the taxes charged under GST. So what kind of taxes will come is like a municipal taxes could be one of the thing when you give the premises on rental basis and making the buyer or the lessee to pay the property tax, then that will form part of the value by virtue of section 15 subclause 2 is concerned. So this is what you need to add for arriving value. Then to that further you need to add amount paid by the recipient on behalf of the supplier. Mark this word, paid by recipient of supply on behalf of supplier. So prima facie this provision says that the liability to make that payment should be that of supplier, but it is only the recipient who has paid that amount. So then that amount also will be added to the valuation of supply only. Example is whenever you are supplying the goods and the freight for transport for delivery etc is as per your contract, you need to deliver the goods to the customer at his factory premises. Then, and for the time being, it is the buyer who makes the payment of freight. Then that freight will form part of the value. That is what this provision says. Further, in to arrive at valuation, you have to also add, as per 15 2, where there are various sub clauses, incidental expenses such as commission, packing, etc., which are charged by the supplier. So if it is charged by the supplier for any of the over and above the supply price on account of packing charges, etc., then that will also form part of the value of the taxable supplies concern. Then to that amount, you need to add also the interest or the late fees or the penalties which you have charged for delay in payment of any concession. That also need to be included. Of course, tax is required to be paid only after you recover the interest amount. But for right now we are discussing valuation. It will form part of your valuation only. When you have to discharge, the time of supply may be deferred to that extent, but valuation it will be added. The next is last is subsidy is also got to be added in this transaction, provided the subsidy is directly linked to the price sell of the supply, and the only those subsidy to be added which are provided by other than central government and state government. So by and large most of the subsidies are coming from CG and SG. Rest all the subsidies are coming, if at all it is there, and which is not influencing, then it need to be added to value. Putting together all this, then you will come to the valuation. So first you go to 15.1 and thereafter whatever the transaction value in that you add this, so you will come to the exact valuation. This is what 15.2 says. Well friends, now we'll take issue number 2 based on this. Suppose Bhavin Mehta and Company is a distributor of cement, and they sold 1,000 bags of a cement to the contractor, which is Mayuresh Construction, and the price at which they sold is 3 lakh rupees plus GST, which is 28% they have charged. Now the contractor has instructed this company to deliver the cement at their construction site wherever going on, but they have agreed we'll pay 10,000 rupees freight for that delivery, but you deliver to that site. That's what the transactions between these two people contract as agreed upon. Now Bhavin Mehta said okay fine, and accordingly so the transaction is 1,000 bag of cement they are selling and they have to deliver at the site as suggested by Mayuresh Construction. Now in that process the bill is being raised. One bill they have raised in this example, they have raised one invoice for 3 lakh for cement and charged 28%, and second they have raised another bill, and that is of transport charges 12,000, and Bhavin Mehta and Company has charged GST on the transport charges on forward charge. That is the option available to a transporter, you know, and they are 12%. Of course, reverse charge by recipient is also optional. So whichever option you want to, here they have charged 12% on that. And now the question comes when we discuss the valuation and the taxability on this front. Now, find one more before I go give my view. I also given an alternative to this, because there are two or three, four possibilities based on the issues which I have framed is by and large which we have come across during our practice, or the issues which are addressed or asked to me during various seminars I have picked up and collected and then framed the issues. So I am simultaneously taking all the other options which are offshoot of this simultaneously. The first is they are charged 12% on transport. In the second case, Bhavin Mehta has received, because they don't have their own vehicle, and they are hiring this, availing the service of somebody called Ram Transport for the transportation, and they pay 10,000 rupees transport freight to Ram, which they have recovered from Mayuresh Construction by raising the debit note of same amount. There is no markup, I assume, for the time being on this. And then they want to claim that it is nothing but a reimbursement, pure agent capacity. So there are two, three options. One is they have claimed as reimbursement. Second, they have charged under forward charge, 12% GST is charged. And now they want to discuss the tax liability. Now the first is concerned about the supply is concerned. Now here, let us try to understand, because entire GST is concerned, unless there is a supply, there cannot be tax. The first and foremost condition we have to understand the supply. Secondly, how many supplies are there, how many transactions are there in entire this thing, because whether there is a one supply, two supply, if there is more than one supply, then whether is it a mixed supply, is it a composite supply, all those things we need to understand, then only we'll able to jump to or conclude to the valuations is concerned. So let us try to understand in this example. Now start thinking as a layman, what was the entire transaction? What for this transaction has happened? The Mayuresh Construction was simply interesting in purchasing cement, nothing more than that. That is very clear from the fact. Okay. It is only thing that he want, that they want the cement bags to be delivered. They want delivery of the goods at particular site. That's all. But otherwise, they are not expecting. It's like a big bazaar or DMart or something. You want it nowadays. We have on net. We do the booking and the goods are being delivered at your house. Maybe they may charge something towards delivery, or they may not charge, as the case may be. Now this is nothing but akin to that. Instead of at their house or go down, it is delivered at site, but by and large. So are there any two transactions when you are booking a making a booking for purchase of some goods? Today, a lot of things we are booking from Alibaba, Amazon, etc. The delivery comes to your house, as the case may be. Okay. Now here it is almost the same. So in my view here, there are, first of all, there are no two supplies. There is only one supply happening. There is the Mayuresh is never interested in transport service. They are only interested in taking the goods part of it. So in that process, when there is a one supply, there cannot be two invoices for them, first of all. So charging separately 12% and cement 28% is absolutely not a correct combination, or rather correct interpretation, or rather correct compliance to the statute. The entire thing is nothing but the value. Now look at that previous slide which was saying that what you need to add to the valuation once you have arrived at 15, one sole consideration is 3 lakh. 15 to earlier slide we have seen, you need to add something. Now in that you look at the box which is a second in the second box, it is there, amount paid by the recipient on behalf of supplier is one, and incidental expenses such as commission, packing charged by supplier. Incidental expenses may packing, commission is a few example. In this case, incidental expenses is of transport, because the contract itself says that you need to deliver the goods. So incidental expenses need to be added. So that's how this 10,000 will be added in that, and the value will be 3,10,000. On that 28% GST will be applicable. There is no element of GST service. Now it's coming to the reimbursement part. In my view, there is no reimbursement also. Let us try to understand what is meant by reimbursement. For the purpose of reimbursement is concerned, there is a relevant rule 33 is there, and 33 is applicable only when there is a value of supply of service in case of a pure agent. Now reimbursement issues comes only when there is a transaction of supply of services there, like custom house agent is there, or such a clearing agent is there, or chartered accountant services are there. We are making many a time payment of ROC fees, as the case may be. Those are all reimbursement. But here there is the supply transaction, that of goods. So there is no question of reimbursement whenever you are dealing with the transaction of goods. That's first. But even if you look at what is the definition of pure agent, So pure agent definition has 4 terms. You can read this. There is no issue. I will not read fully as it is, as the case may be. But in nutshell, what pure agent says that the pure agent is a person who only being used as a conduit for making the payment for any goods or services which are actually required or rather used by the recipient. Now, in this case, our example, the transport is concerned. For transport, the Bhavin Mehta and company has made the payment, but not as a conduit of the Mayuresh construction, but it is his own liability because Bhavin Mehta has entered into contractual agreement. Yes, I will deliver the goods at your site. Of course, I'll charge for it. That's okay. So principally, transport payment of 10,000 to that Ram Transport was a responsibility, duty, and liability of Bhavin and company, and those services were used by them till the goods are delivered at site. The goods were obviously the property of Bhaven Mehta. It was never been transferred in the Mayuresh Construction Company. So the transport service was availed by Bhaven Mehta for his goods till then. Only when it is been delivered at the site, that time the property has been transferred to the recipient of the supply, that is Mayuresh Construction. So reimbursement formula also will not work. An entire valuation of 3,10,000 one invoice will be prepared and 28% GST will be charged on that. Having gone through these second issues, we will now go to the next section, section 15.3 is concerned. What is 15.3 says? 15.2 says what you have to include, and 15.3 say what you are not to include while valuation. In that process, first is it says discount. You need not have to include the discount in while valuation of the supply. And now discounts, there are different type of discounts are there. The section is categorically distinguish the discounts. There are discounts which are offered before happening of supply or at the time of happening of supply. If your discount, you have decided to give the discount to your customer, if it is agreed between principal and customer before making of supply or at the time of supply, then that discount has been duly recorded in the invoice. It should be recorded in the invoice, and tax is required to be paid only on the net amount. Normally we call as a trade discount, volume discount, as the case may be, and this will not form part of the value. And so that's why the rule says, section says that you need to exclude that. There are certain discounts which are being given or after the supplies happen, and those discounts are normally cash discounts or performance incentives, as the case may be. Now those discounts are concerned, they will be added in the valuation subject to one exclusion. If there is an agreement, contract between the supplier and the receiver, which is executed before supply, in that agreement there is a mention about such kind of discount which will be given periodically even after completion of supply, then you have to eliminate or deduct those discounts. Otherwise these cash discounts etc is concerned, if it is not agreed upon before the supply by way of a contract or agreement, as the case may be, that will not form part of the value of agreement. The If you are reducing that, reversing that discount, then corresponding ITC also need to be reversed. Now based on that discount, I have taken few case studies, but let us also go through some clarifications which are given on discounts and even the bad debt. First of all, there's a difference between discount and bad debt. Of course, we nomenclature also we understand, and being accountant auditors, we know the difference all the way. But from the perspective of a law also, and in service tax regime also, this was very much valid. The first is discount is either trade discount which is to be excluded from the consideration. Second is a cash discount. Primarily, basically, nomenclature can change here and there. There is other is a cash discount which is to make the payment promptly before the due date, and that is not to be excluded from the consideration of valuation unless it is part of the contract. This is a type of discount. So discount will form part of value or no, it's all depend upon how the contract is executed, and that I'll explain by way of example or the issue which I have taken in my subsequent slide. But as regarding the bad debts are concerned, there was no contract. Obviously, for bad debt, it is only an outcome. Then your buyer has not paid you full amount or part amount, as the case may be. The debt it was due, but you could not able to recover. So supply has happened. Price was also known. So GST is fully payable and you don't get any credit for the bad debt. That has been clarified also. With this, let us take now issues. This issue is more related to the discount related thing. Take an example, there's a company Everready which is seeking your advice related to valuation of their product, okay, which is cleared from their factory and they are supplying to various dealers, their dealers, distributors, okay. Now company is concerned, they have got agreements with their every distributor and through the agreements they have also various schemes they are running into and which is notified or rather conveyed or intimated to the dealer at the beginning of the year. So before supply, everything is known to the dealer and company both. First, as per the agreement, they say we will give you flat rate discount 20% on the printed price. That's first part of it. The second is concerned, there is a normal credit period of 2 months given to each dealer for making the payment of the supply. But for any reason, if the distributor makes the payment before the due date, then they are before the due date, here it is given condition make within 1 week of the date of supply, then 4% additional discount will be given and the nomenclature uses cash discount over here in this contract. And the third is, in this contract they have also mentioned that there is a performance incentive at the rate of 5% will be given to each of the dealer if the targets are achieved by the dealer in each quarter. So they have got parameters to give incentive based on the quarterly targets, okay. The said incentive whatever gets accrued to each and every distributor, it is the policy of the company to give this incentive by way of reduction in the value of supply made in a subsequent quarter. So for example, first quarter April to June is there, and based on the achievement of target in this quarter, suppose a distributor one got say 1 lakh rupees incentive, that 1 lakh rupees will be deducted while raising the supply invoice for subsequent supply made in the quarter July to September. This is how the company is passing on the incentive. There may be a different modalities followed by different companies. Some company will give you credit note. Some company will give you a check also for incentive. So different models could be there. But this is what the agreement is. Here, this company follow this. Now the company in this case is of the view that the above amounts are discounts, all are discounts only, and they are all deductible. They are deductible for the purpose of valuation under GST, and GST is to be charged only on the net value. So they say there is no GST applicable on discount. That is a view taken, or rather their consultant has guided them. However, in GST regime, at least many of you must have faced that the statutory auditor of the company is there to certify your balance sheet and financial statement true and fair. So in this company, Mehul Shah, our dear friend, is auditor of this company, and he is of the view that no, this is not discount at all. This is an incentive or the commission which the Everready has given to all its dealer for promoting and marketing the goods, because based if you give incentive, target incentive, etc., more and more goods will be sold. So it is not a discount by a per se. I'm sure Mehul is logged into this, and this is what the view he is as an auditor says. And he says that yes, if that being the case, it is a service being provided by that distributor, and it is a transaction of supply of service, and on that also they should have charged GST, and as the case may be ITC, whatever. So hence consideration for supply of service is there, and therefore dealer will be required to discharge 18% of the gross amount, okay. So now here what will happen is the incentive part is concerned, incentive is given to the supplier who is a distributor, but here gross value only GST is to be paid. So as per me, there is a liability on the company which is not accounted for. That is what the view. Now that is seeking our view, okay. I hope you have, all of you understood the transaction. Now let me go by this thing before I give my view as the case may be. Of course, let me slide with it. First is concerned in the indirect taxes, especially service tax, excise, or now even GST is concerned. These are all consumption based taxes. That's first thing. In all these cases, the law is concerned is always by and large you will find this is a customer centric. You have to look at from the customer's perspective, because incidence is always borne by the customer. The supplier will be collecting taxes as a trustee of the government and making the payment to the treasury. So the supply is the hit is concerned. The essence of the transaction will be always, you cannot supply anything unless it has been demanded. Okay, you may produce the goods, but supply will happen only if it has been demanded. Same way as the services. Services once stable, we cannot generate anything in anticipation of demand also. Fine. So in this case, what is the transaction, essence of transaction between the Everready and all its dealer? First of all, there is only one agreement between these two, and the whole purpose is why distributors were appointed. The Everready were in the business of manufacturing and selling of whatever products they are into, say battery cells, as the case may be. And they have appointed dealer. Why? Because they want to sell this product. And dealer, this is the normal channel through which the marketing of their own goods are being done. So it is not the services of marketing they are availing, but they want to market their product, that is sell their products. Now, if they want to sell their product, for that, the channel of distributors have been opted through by them, and they are always selling the goods to a distributor at some discount so that distributor can make a profit out of it or whatever margins are there. Now, once the goods are supplied, distributor becomes owner of the good, and thereafter distributor can sell the goods as per the whatever price as the case may be. There is no element of service is there. Neither ever it is in the business of providing service, nor they are interested in availing any services from the distributor. If at all, suppose they want a service of promotion and marketing, they might have appointed them as a CNF agent or marketing agent, as the case may be, where the ownership of the goods or the possession of the goods never gets transferred in the hand. Only your agent holds the good as in a capacity of bailey. Okay, they are never been an owner of the goods. But here in distributor's case, the goods are being sold. The ownership also get passed on the moment supply happens and you raise the invoices. Fine. So there is only one supply in entire transactions. Fine. So the contention of Mr. Mehul in this case as a auditor, that there is an element of a service being provided, and that's why there is an incentive, which is not a correct contention. Now, taxability, valuation, etc., fine, but nomenclature is concerned in all the three cases nothing but a discount, and discount is what? In our financial or commercial term, it is nothing but reduction in price. It can be by way of prompting the person to pay early, or as the case may be volume based, could be anything, cash discount or trade discount, volume discount, but it is nothing but it is a reduction in price, nothing more than that. It is not a consideration for a services. And in support of that, I have given some citation. There are many citation in the old law, but specifically I have picked up in the service tax regime. Even in the excise regime, there are transactions are there. In excise regime, the cash discount etc. is not at all a point to be considered for levy of excise, but the trade discount is concerned. We have seen in the earlier side, section 4 of Central Excise Act, that is the value at the time the supply happens and invoice when the goods are removed. That is the time and the place will be the value for the purpose of levy of excise duty. So trade discount will be reduced in the excise regime, and on balance invoice you admit to pay the excise. Here in service tax, these transactions are quite common, and there are a lot of cases where they are in the tribunal which has been decided. Many are pending. We are also have a occasion to fight these kind of cases on that, and that is I have given here relevance of some car industry. Now there are two decisions: My Car Private Limited, Sai Service Station, one of Mumbai, Delhi, etc. Here what has happened? There are peculiar kind of discounts being given by the car industry. Say Maruti car, they have got various dealers are there. Now these are all the dealers agreement will be there. Now there are, for increasing the turnover of car, the company, that is manufacturing company, many times announces schemes, festival schemes from time to time, like Dasara offer, Diwali offer, as the case may be. Now that the price keeps fluctuating. Now in that case, the industry's practice is concerned, there is a schemes being announced every now and then based on the requirement, and not at the beginning of the year normally, and the amount is given to the distributor by way of a reduction in price. They may use the word incentives or trade discount as the case may be, and thereby insisting the distributor to reduce the selling price in the hands of customer so that the turnover is increasing. Now in some of the cases we have come across, then this amount which is reduced by price by the manufacturer, what they do is they give a credit note for that, and that credit note is concerned is adjusted in the accounts by way of reduction. So it is treated as a collection of a dues from the dealer by the manufacturer. The department has issued show cause notice in such case. It runs into lakhs and crores of rupees because car industry, you can see the turnover of every distributors are running in crores. Fine. And so incentives are also even 1 to 3% incentive itself is a very big amount, and then the liability. So in such cases, department says that it is nothing but a business auxiliary service being provided by the dealer to the manufacturer, and which should be liable to a service tax. The tribunal says no, the transaction was never been executed. There was only one contract, and which was a dealership agreement. Those eras, VAT was leviable, so company was charging, Maruti was charging VAT to the dealer. In turn, dealer was charging VAT to the ultimate customer who buys. So entire transaction was nothing but supply of goods. There was no element of service when they are dealing in this thing, and whatever these incentives are given is nothing but a reduction in the price. It's an adjustment to the price, and thereby the department, the case is decided in favor of the revenue. No service tax leviable. Going by the same analogy in the earlier case, in the ever ready, there was no question because there was only one supply transaction. There was no element of service. Neither they are interested nor there was a contractual obligation for that. So thereby, in my view is concerned, this will not be liable. We have got a support available. Now, some clarifications from further going ahead on this is by the department in 2019, one important circular and voucher for distribution of samples. Okay. Now, any companies distribute this free samples, there were issues being raised that how the treatment has to be given. So now the clarifications have been issued by CBIC, and that they say there are two type of clarification on sample. One is sample is given to a related party or distinct person that we have dealt with in other case. If such samples are been given, then section 15(1) will not be applicable. Normally samples mean nothing is charged. It is a free sample. So when the section 15(1) is applicable only when the amount consideration is charged, that is transaction price, when price is sole consideration, provided the transaction is between the non-related person. But when it comes to related person, you need to go to 15(4), and thereby ultimately you go to rules. And rule says that whenever there is a transaction is between related party, there is a mechanism provided how to value it, okay, at market price or 90% value as the case may be. So here the clarification says that whenever you are giving free samples to related party or distinct person, although you are not charged anything, it will become taxable and the value has to be determined as per rule 28. But when it is not given to related party, there will not be any tax liability. Then it is not hit by rule 28. It will be straight section 15(1), and price is sole consideration. There is no consideration. No consideration, it is not taxed. But in this case, one consequence is if you are given that, your ITC to that extent will reduce to the tune of free samples you are given, and that is by section 17(5)(h) of the CGST Act. That is one clarification. Now, another clarification through same circular is when you give buy one get one free. That kind of offer is there. You buy two shirts, get one shirt free, ready-made garment. A lot of things are there. Such kind of schemes are there. Now, buy one get one free. So, in that, how to value, etc., etc. Or that time you buy two pant and you get two shirts free. So many kind of combination may be there. Now, in that case, the depart and suppose the rate of tax is different on both the item, then crops up the issue as the case may be. So here department has clarified CBIC saying that this is if it is a composite transaction, because when you are giving this combination buy one get one free, it may be in the normal course of business, or the combination may be a composite supply of same goods, two different goods, or it can be mixed supply. So depend upon what kind of offers is there. So suppose it is toothpaste, if you buy, the brush is given free to you, toothbrush, and if that is a transaction, so it is a nothing but a composite supply. You pay for the paste and you get the brush free. So what is rate applicable is on the principal supply being composite supply, but there is only one supply. There are no two separate supply happening. That is clarified. But suppose you buy a shaving kit. Now shaving kit, if you buy anything, on that shaving kit also you get some paste free. Okay, now shaving kit has got nothing to do with the paste. It's not in a normal course. Two different altogether goods are coming up. So they say it's a mixed supply and takes rate applicable at the highest rate will be applicable. But in any case, the clarification says that there are no two supply, one supply happening. Of course, so valuation is concerned, you need not value the transaction which is free of charge. That is what clarification. Having understood 15, 1, 2, 3, now we'll go to the next part of it, and that is 15.4. 15.4 says that where the supply cannot be determined as per section 15 subclause 1, that is price is sold considered, then the same shall be determined in the manner as may be prescribed. So 15.4 says that first try with 15.1. If you can't, then go to 15.4, and 15.4 is giving reference to valuation rule, which we'll see in the subsequent slide. And lastly, notwithstanding anything given from 1 to 5, there are certain type of transaction of supply, which for that specific rules will be notified by the government for valuation, and which I have told insurance transactions are there, air booking transactions are there, agent, etc. So those are all specific. Forex brokings are there. For that rules are there, you need to verify. That's with this we have completed section 15, the only section in the valuation as per CGST is concerned. Now we'll have some rules and then issues related to rule coming up. I'll take few rules and simultaneous issues. There are we are not even up to the half a mark. There are about 5 to 6 issues left out, but I think we'll able to conclude within the time allotted. Now the first section is 27 section, and when consideration is not wholly money. So nowadays there is a exchange transactions are happening, and in the barter exchange, let me check if there is any issues are there or not. So far so good. Uh, yeah, there are one or two issues which I would like to address here, which have came to me. One is I have rented a premises and quarterly maintenance charges are paid by lessee. Do I have to add these charges as per section 52 in my rent invoice? Lease agreement say it will be paid by lessee. Yes, this is first question coming up. I'll deal with that since we have already dealt with that. The here is, so in nutshell, what the querist is asking is that the rental agreement is clear that over and above the rent, the lessee is also supposed to pay the society maintenance charges, whether that will form part of the value while paying GST. In my view, answer is yes to that. The maintenance charges, see the premises during that your tenancy or lease agreement, it will be used obviously by the lessee, but maintenance size, try to understand you are paying to the society, okay, and it is your duty or rather responsibility or liability to pay maintenance to society, whether you occupy or somebody else occupy, doesn't make a difference, okay. So first is you read section 15.2. What 15.2 says, that what you need to add is the exact wording of section 15.2 says that the addition over and above the valuation, what you got to add is any amount which the supplier is liable to pay in relation to such supply, but which was incurred by the recipient. Now tell me, suppose maintenance charges in spite of this agreement, the lessee has not paid, he has defaulted. Tomorrow, the society want to recover it. Society will approach to lessee or to lessor. In my view, society has no recourse with lessee because he is not a member also. It is the lessor who is a member. So any legal proceedings or suit or notice, etc., will go to lessor only. So it is a duty, responsibility, and a liability of the lessor only, which is obliged for the timing as per your agreement by the lessee. That is your contractual agreement, and you have structured your transaction in that way, that will not affect the valuation. In my view, you need to add this to the valuation. On the same ground, let me tell you, even if electricity charges are being paid for that, that also in my view should be added to that. The next is GST applicable in case where write-off of credit balance is done as the amount is no longer payable, the balance is outstanding prior to 1/7/2017. So what the question is asking that there are some creditors in the books of account which is there in from pre-GST regime, and which are standing out remaining unpaid as on 1st July 17 when GST was notified or introduced. When you treat that as your income, whether GST is payable, the first thing, let me tell you, GST is not on the income. It is income tax you are paying on the income. GST may first and foremost requirement is there has to be supply, and any supply on or after 1st July only there will be charge created under GST statute. Here there is no supply happening first of all. On the contrary, when is your creator, you have purchased something. Otherwise, there cannot be a creator. That's one. Secondly, whatever has happened is in pre-GST regime. Nothing has happened post-GST in your case. Only your transaction, the liability is converted into income. Converting your liability to your income is not on account of any supply. No GST payable on this. If free samples are old, now the third question coming up, if free samples are old to related parties, Then also ITC to be reversed even if GST is paid on it. GST is paid on it, as I understood, GST is paid only at the time of purchase, I believe. That is what, and that is obviously because you have purchased. Or there may be possibility you have received the sample from your principal free of charge. That all possibility is there. But I presume in this question that GST is paid at the time of purchase. And when you are giving free samples to your related party, free sample itself says that you have not charged anything. So there is no question of charging. But you have opted to pay GST on that, then you must have arrived at some value. And if you arrived at that value, that is what the provision also says, that do the valuation as per section 28. And if you pay GST, that is the correct process. To if your related party transactions are concerned, free samples, you need to pay GST at the rate of 28. And if you have done that, then there is no question of the reversal in my view is concerned. Fine. That's all the questions so far. So good I have received. Now we'll go to the rules are there. The where there is a consideration is not, nowadays we have got a barters exchange transactions are happening. So then if the consideration is given either fully in barter or partly in barter, then partly in cash and partly by barter, then what the provision says that in that case value of supply is concerned, value of supply will be, first is open market value of such product. If you don't get the open market, then if it is not available, then consideration in money plus amount equivalent to consideration not in money if such amount is known at the time of supply. So first you find out open market. If you don't get open market, then apply the second formula. If both the formula are not possible, then supply of good service of similar quality of the goods. Find out what is that valuation. Very difficult. Similar quality, etc. Very difficult. At least for services, it will be very difficult. As far as the goods are concerned, there may be possibility, but still similar quality. There are a lot of issues under the old excise regime also on valuation front. And then if you can't do it in any of these three, then you have to go for rule 30-31 along with money consideration. This is the basic rule. I'll take the rather, but this by and large, since we are almost now GST is 3 years old almost, most of us are aware of the basic provision. Just I am giving cursory look so that you right now you will get a grip on the subject fast, since the provision is known to you upfront right now. You'll able to understand the issue. That's why I'm explaining this. Now certain terms are defined over here. Open market value, they have stated that what is mean by open market value. So it is a price at which the transactions are happening between non-related person is the, and the price is sole consideration is the open market value. I think that's a very simple to great extent to understand what is open market value, and they have explained in the rule also with the help of example. The same I have reproduced here, that suppose you have, there is an iPhone seller or phone seller is there, he is offering a new phone to you, and the two prices are there. One is 20,000 rupees you pay plus you give your old phone exchange, then he will give you new phone. That's one. And if you don't want to give anything in exchange, then it will cost you 24,000. So what is open market value? It is obviously 24,000. That is what. So in that case, the what is value of old phone? So in this example, it is 4,000 rupees, because 24 is market price minus 20. This is the example they have given while explaining this. Okay, rules. Now there is another example they have given. This will be useful when we take it. Our issues are concerned. The laptop is supplied along with the barter of printer. Suppose there is a company who is in the business of laptop selling, and there is another company who is in the business of a printer selling. And if there is a transaction happens, then the laptop dealer says to the printer dealer that you give me one printer and take one laptop plus pay me 40,000 rupees. And if the value of printer suppose is only 4,000, then the value of laptop is 44,000. This is how the open market value is concerned. You need to arrive that the rule says in this case. Now here the next rule is valuation. One or two rules are there which will take, and thereafter we'll go to the issues. The other interesting issues are there. The valuation related to distinct person, that is either other than through agent. So distinct person or related person, if you have a transaction, section rule 28 is the one you need to go look into for valuing. So here when you have such transaction, how to value? The first is whenever such transaction there, you will not go by section 15.1. Price is sole consideration, that will not be applicable, because here you are related and distinct person. You have to go to section 15.4, which will direct you to rule 28, and thereby you go to first is open market value. If you don't have open market value, then you go to the value of supply of goods services of similar kind, and which is a challenge. If that is also not possible for you to find out, then it will be 110% of the cost of production. And the four is if all three is not possible, then the reasonable basis consistent with principle and general provision. I think first three you should get, otherwise there is nothing called reasonable thereafter left out in this. In this provision, very important is in 28 rule, we have one this provision which is very helpful. That is where the recipient is eligible for full ITC, whatever value is declared is an open market. This provision will help a lot because whatever value you put, if your recipient is eligible for full ITC, then absolutely there is no problem. In the first example, we have explained that Hemang is giving premises to the Tata hospital, and suppose they turn out to be relative. Still, this provision will not be applicable although they are relative, because the recipient should get full ITC. Now, Tata Hospital is into the medical services and medical service is exempted, so they are not eligible for ITC at all. So even if they are related, because they are not eligible for ITC, in the very first example, this rule 28 will not able to apply even if Hemang and Tata Hospital are related party. But Tata Tea and Hemang, if it is related party in this example, then we'll able to take the support of Rule 28. That's why I taken there the example of Tata Hospital also in the first slide. Those who are logged in from slide 1, I am referring to that first issue, and the relevance is coming here from Rule 28. And the where goods are supplied as such means if you are just a trader of the good, not the manufacturer, then only you can say goods are supplied as such. And if you have supplied it to the related party, you have one more option available. Whatever is the value at which you are supplying to non-related party, 90% of that is allowed to be taken as a value when you are doing this transaction with your related party. So that option is also being given through provision. With this, value of like kind is concerned is also being explained over here. What is means of value of like kind? I'll not go into the verbatim of the definition, etc. But the definition is concerned on paper or exam we can write properly. In real life situation, there are good challenges which we will find it difficult. Exercise, there are a lot of precedents are there. So I'll not go into this side, but rule 20 is the one where value of like kind and quality, and they have given what are the options. I think we'll more stick on the issues are concerned. Some of the slides are concerned, I'll just given for reference because this material I am going to share it, and those who want to refer. Now here is a definition of related person. I will not read it on this part. By and large, you have accounting standard related party, your income tax may related party. By and large, it is at par with that, not 100%, but by and large. So related party is a term by itself. You will able to make out by reading this part. And what is meant by distinct person is also defined in section 25 as well as section 15. Now, distinct person, very important. A person who has obtained or required to obtain more than one registration in a state. So now one company has got 3, 4, 5, 10 branches. If all the branches are located in different state, then obviously separate registration is compulsory, provided his turnover is above the threshold, and they will be called distinct person. Secondly, if all the branches are supposed within the same state, then now the option is also available for us to have a separate registration for each branch now. Earlier, yeah, there was a condition that you should have a separate segment, then only you can get. Now it is not there. Separate vertical or etc. Now it is not there. Then it will become a distinct. So all your branches, if you have taken separate number or required to take separate number, then that will be distinct person for you for each of the establishment. That is what in nutshell is the definition of 25(4) is concerned. Valuation of good through and between principal and agent. I think whenever this is another rule between agent and principal. So here also it says open market value or the 90% of the price at which you are selling to other. I'm just cursory or just added in a note, but I know that we are not able to halfway to take it issues first. So I'm not going in detail of that. But this is what 29 rule is specifically between principal and agent transactions are concerned. Now example also what they have quoted is, suppose one principal is giving to their agent some material at what price, that is whether it is at market price or no. If you want to know, then how to find out at what price the agent is selling to ultimate customer, find out that. So in this case 5,000 at which the agent is selling. So as per the earlier 90% of that is a one value you can take, that means 4,500, or compare it with others. So there is a other principal selling the same goods to him, and if that value is 4,550. So these are two value available. Whichever value you opt is perfectly all right. Only issue challenge will come over here between that, how to find out the similar value and all. But anyhow, that will look understand with the help of transactions. Okay. Now the next is money changing. Money changing, I'm not going to deal with it. It is only separate rule. Provisions are there. How to value, etc. So these are specific industry wise. As a part of my notes, I have just kept it. Insurance, air travel agent, etc. This is specific industry specific. And if anybody has any issue, you can put me on the this thing chat. I will be replying to that rather explaining this, because otherwise we will not run through the other important issues which I have worked out on this. Now, this is very important. A valuation of person dealing in second-hand goods. Be careful on this. If you are dealing in second-hand goods, then only this provision will be applicable. Need not be the car. It can be anything. So you are a dealer of a second-hand goods. Then how to discharge the GST? So person dealing in buying and selling of second-hand goods, what he is supposed to do is, first is he can opt to pay the GST on the sale of the goods to ultimate customer at the whatever price. That's one option available. Say suppose I'm dealing in X product, I purchase for 10 rupee and sell it for 12 rupee. Now 12 rupee pay, I can pay GST. There is no doubt at whatever rate applicable. That's one option available. But by and large, the person dealing in second-hand goods, when he purchase the goods from his vendor, on most occasion they are unregistered. So the question of ITC etc. come into play. So that route may or may not be viable for you. So that's why there's another option being given, and that is you can pay the GST on your profit, that is gross profit. So selling price minus purchase price, that's an option being given to it. And if that option turn out to be negative, because when you are dealing in second-hand goods, there may be possible sometimes there are some slow moving items are there, second-hand mobiles are there, second-hand cars are there, electronic items are there, a lot of things, computers are there. So you never know whether you'll be able to make profit, what kind of profit. There may be possibility of loss. So when there is a loss, you have to find out, obviously you have to prove it item wise, and if it is negative, you need not pay any tax. So that is what the mechanism given in this. Now this is very important for two reasons. Mind well, this is not applicable in the case when person like me or you we are all in a profession and we have got a lot of assets in our office, maybe your car, computer, as the case may be, and when we are selling that, this rule will not be applicable, although those goods are second hand, but we are not dealer in second hand goods. Try to understand, it is applicable only for those who are a dealer in second hand. We are in practice of chartered accountancy, as the case may be. So we are disposing our goods which are used. So that is not a dealer in second hand goods. And that is been clarified by this slide, and which is a notification and number 8 of 2018. But mind well, this notification is only for car selling. Car is being sold by us after being used. So it's a car sold by a person after using the same, not the dealer. It will not be applicable to any other asset except car. So now what this notification says that when I purchase the car, mind well, on car we don't get credit except for certain person like dealer or a driving institute, etc. Few, barring few, nobody gets credit for the GST paid on car. Now in that case, what happened? I purchased the car for say 10 lakh rupees. Over a period after using, the WDV comes to 5 lakhs, and I may sell it for 4 lakhs or 6 lakhs, as the case may be. There may be a profit or loss, whatever. Now this notification says that when there is a sale of old car, you need to pay GST only on the margin. So that is margin means a profit. Okay. How to arrive at that profit? The selling price minus WDV. The question will come, which WDV? So there, because if you are a private limited company, in books of account, you depreciated as per the Companies Act through this thing, and in income tax, there will be separate depreciation provision or different rate will be there. So the notification is very clear on that. This depreciation as per Income Tax Act, you have to find out WDV and then compare it with the selling price. Whatever is the difference, if it is positive, you pay the GST on the same. If it is negative, ignore it. But the very important is concerned, entire amount of this car sale second hand will be treated as an exempt supply of you for that year, and you need to reverse proportionately your ITC claim under rule 42 or 43, as the case may be. Based on this, very important, mind well, this is only for car. But if you are selling other assets like your computer, laptops are there, if you use it for 3-5 years and you sell it off, and mind well, this notification will not be applicable. There you can't make payment of tax on WDV profit, as the case may. You have to sell at a market price, supply, whatever. In the sense, whatever is the selling price. Price is the sole consideration. Fine. Now let us come to some of the issues related to token. token vouchers, gift vouchers, etc. The relevant section here is concerned, you know what it tokens, etc. There are different nowadays. This coupons, vouchers, tokens, stamps. This is a very common. Like you go to lifestyle vouchers are there, Akbarali vouchers are there, various vouchers are the DMart, or even the Kalyan jeweler. That too, advanced ruling I have dealt with in the subsequent slide. The vouchers are there with this various condition attached to it. So normally what happens is you have to purchase that voucher upfront by making some money, payment of money, and then you can use it for buying certain products as the case may be attached to that voucher, and that is called redemption against the supply. Now here the money value of goods or services are both redeemable against such supply. That is what normally in nutshell voucher is concerned. Now in the voucher, when the tax is to be paid, okay, and how the tax is to be paid. The first is that the provision says that whenever you make the payment for purchasing of the voucher, you get a right to redeem the amount for purchasing goods or service which is embedded in the voucher to the tune of consideration or value mentioned therein. So the supply is concerned whether selling of voucher itself is a supply, that's one thing, or the supply is the one, the goods which you purchase or service which you purchase at the time of usage of voucher or redemption of the voucher. So these are the 2 points coming up, and for the relevance, let us go through the advanced ruling. I'll take you through the. I was in the beginning of my talk only. I stated that I don't more rely on the advanced ruling for various reasons, and this is one big shocking advanced ruling. Let us go with, and it's a very famous Kalyan Jewelers advanced ruling, which is delivered only in this current year of 2020. Now, it is dealing only with the vouchers, etc. In this example, they have, in the advanced ruling, the term used by them is a PPI, that is prepaid payment instrument, PPPI, okay, and which is nothing but a gift voucher or card. So card may be of a plastic card or gift voucher as the case maybe. That is the question posed here. There are 4 or 5 different questions are there. I have taken one by one. Now, whether issues of own closed PPI, own means Kalyan Jeweler themselves are issuing their vouchers for X amount by the applicant, that is KJIL, Kalyan Jeweler, to their customers. Say for 10,000 rupees, you have purchased a voucher from Kalyan Jeweler, which you can redeem for say next 1 year for purchasing any of the ornament or jewelry from their shops. Whether this 10,000 which you have paid while purchasing the voucher is liable for GST, whether it is a good supply or service supply. That is what the advanced ruling sought for, one of the issues. Now, in this entire, this is a very 14-page advanced ruling is there. Some of the contention arguments I have mentioned, which is I find with relevant to understand. The PPI is concerned, is not an actionable claim. Is an actionable claim. This is an argument by the assessee under the Transfer of Property Act, where Civil Code recognize this as per the above act. So as per Transfer of Property Act, Civil Code recognize this as nothing but actionable claim, and it is neither goods nor services. Okay, and they say that it is Honorable Supreme Court in the case of Sodexo voucher in the old regime. Service tax regime, we have these Sodexo coupons were there, which we can redeem against services of restaurant as the case may be. Now that matter, Supreme Court has already stated that it is they are neither goods on that front and no tax will be applicable. Now here that contention was also made. Further, what all is discussed is gift voucher card is an instrument which is squarely covered under the definition of payment instrument. It is nothing but a payment instrument with a limited validity, because it will be valid only in certain premises, only for certain goods as per the conditions, and that is under the Payment and Settlement Act of 2007. There is a separate statute governing that, and it is not a claim or debt whatsoever. So suppose you purchase 10,000 rupees voucher from Kalyan Jeweler, until you redeem it or until it is expired, that will be shown in the books of account as the advance received, and it will be liability on the Kalyan Jeweler. 10,000 rupees lying as it is, fine, and when it is redeemed, it will be effected for. So it is not a claim or a debt. Okay, the voucher is concerned, you can use the voucher as per the condition and you can purchase, but you cannot take back the money. So it is not a debt, but it's a kind of an advance received for goods to be supplied in future in this case. Okay, so it is not a claim or debt, nor does it give a beneficial interest in any mobile property to the bearer of the instrument. Nothing. You can redeem it. That's what this thing is concerned. Then next, the holder of the card and voucher, if loses, suppose that is like a bearer, and if you lose, it's a 100 rupees note or 5,000 rupees note or 2,000 rupees note, as the case may be, and if you misplace it and unable to produce before this thing, then it is gone within the particular time limit or validity period. Then the customer cannot use it again. Means you have to purchase it. If you misplace it, gone. If you can't use it before the expiry date, that also is gone. So it is not an acknowledgement of a debt. It is only a payment instrument under the Payment of Settlement Act. And secondly, it is for the Kalyan Jeweler, it is only advance received for the supply to be made in future. Okay. Then hence it is not an actionable claim as defined under the Transfer Property Act. It is only an instrument accepted as a consideration, part consideration while purchasing the goods from the issuer, and the identity of the supplier is established in the PPI. That's all. Therefore, PPI, now here what happened is, the instrument is accepted as a consideration, part consideration while purchasing the goods. Okay, so you can redeem it. Now, therefore, the PPI under the consideration is squarely covered under the voucher. So it is nothing but a kind of a voucher which is defined under section 2118 of the CGST Act. Now, any property other than immovable property is a movable property. That is what the definition is under the GST Act. So what is meant by property? Anything other than immovable property. Now, this is department is contending. So in this case, customer is purchasing gift voucher. See the thinking, means how the department is thinking while pronouncing his advance. They say customer is purchasing gift voucher and card by paying the issuer. Paying means what I pay 10,000 rupees to issuer Kalyan Jeweler. Whoever produces the voucher, okay, at their counter will be given this, the credit for the same. Now stores, voucher at their store, they will be allowed to redeem it. Okay, the voucher has both the value and the ownership, and is the property of whoever first purchased it and later whoever redeems it, and is a movable. Just because this is other than immovable property and has some features, it becomes immovable property. That is what the department, while pronouncing advance ruling, stated. It is neither money nor actionable claim. They say it is neither money. Money is concerned legal tender valid across. The voucher is not valid across. It is valid only in the certain. So it can be limit money for certain establishment, not for all. So that's why it is not money. Secondly, not issued by Government of India. So it doesn't have any of the parameters, and nor actionable claim as discussed there above. So the department say it is nothing but a movable property. Very surprising. And hence the gift voucher issued by the applicant, here Kalyan Jeweler, being vouchers under the GST Act, and which are goods under section 252 of this thing. So now any voucher is treated as goods. Now it is in different facets, the voucher is treated as goods, but this voucher is what? It is embedded with only consideration money there in that. Further, when the vouchers are purchased by the customer, there is a consideration. Now, sir, when somebody pays me 10,000, what is considered? That 10,000 already locked, embedded in that money, and you can encash it. It is like our railway prepaid card, or as the case may we are getting. The face value which is paid, it is for the furtherance of business of the applicant. Obviously, Kalyan Jewelry is in the business, but they are in the business of selling the ornament, not the vouchers. Voucher is the way in which they are promoting their business of selling the ornament. They are not in selling the business of voucher, as the customer or bearer will in future definitely buy jewelry from the applicant. They obviously most customer will buy, definitely buy. It's a prompting that person. They may be giving some schemes, discount, as the case may be, but there is no certainty that it will buy. Some people may forget also. Okay, the person like Amit Doshi is concerned, he doesn't have that much time for 10,000 rupees. He'll go to Kalyan Jewelry. He said, "Jane do 10,000, forget it, and bhul gaya, the next time we'll say." So there is no guarantee that voucher will be always redeemed. Okay, but then the department say it will be. Hence, supply of voucher qualifies as a supply because it has got a parameter of a movable property. It becomes supply. I don't understand. Supply is concerned. Yes, there has to be supply of goods and service. You should be in that business of supply. Kalyan Jewelry is in business of what? They are supplying the jewelry. Are they in supplying of vouchers? Or lifestyle is in the business of supplying vouchers? Not at all. Lifestyle has got various product, etc. They say yes, then it is supply. So the kind of the pronouncement advance ruling come, now you can understand what kind of the advance ruling, how much we should rely. Further, the next question was asked, if yes, is the time of issue of PPI by the applicant to their customer is the time of supply of goods or service? Now, having decided what is the time at which liability has to be discharged. So now others are all subsequently they say, okay, go to the section 12, 13, as the case may be. Time of supply of goods voucher are concerned shall be the date of issue of voucher if voucher are specific for particular goods. So if it is for ornament, whatever is the rate of ornament is there, pay tax. So you are selling the voucher and applying the rate of ornament. Now just try to understand. See why you are applying the rate, because voucher can be redeemed against that. So there is a supply never happens. It is just like a money valid within a certain organization. But they said no time of supply because it is goods, rate of goods will be applicable. Okay, that is what they held. Third is if yes, what is the applicable rate? This is very surprising. What is the applicable rate of tax on such voucher? They say that advance in case the paper based voucher is there, then it will be classified that custom tariff at 4911 paper head voucher 12% rate. Now jewelry rate is suppose 2%, 1%, 5%, whatever. They say when you sell the voucher 12% you pay. Okay. And if it is a plastic base, okay, then smart card, then CTH 8523 pay 18%. अभी 10,000 का वाउचर लिया उससे 12-18% भरने का ऐसे केस में भी when you come on reduction तभी दूसरा सप्लाई शुरू होएगा ऑर्नामेंट का उसका रेट वॉट एवर 1 to 5%, तो वो 12% एक बार गया देन सप्लाई हुआ तो उसका 2 how it will work and what is there are two supply. First of all, there is only person coming for buying the voucher. I told you this indirect as customer centering. Am I interested in voucher purchasing? Okay, why we purchase voucher? Suppose we have yearly budget of 50,000 rupees for purchasing ornament. Normally our females, wives or whatever, or girlfriend also. Okay, so every 50,000 at a time मेरे ऐसे आदमी के लिए तो impossible है. So what I do, every month 2-4 हजार का voucher जाके ले लेना कल्याण ज्वेलर से, फिर दिवाली आएगा, okay एक साथ 50,000 हो गया होगा. That's why we put there can be various purposes. But tell me, I am interested in voucher? No, I am interested in jewelry. I am just there a different way. So how can there be 12%, 18%? This is what the advance ruling is there. So absolutely ridiculous decision on this part. But anyhow, so now in my view, there is no supply. Hello, 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 Charvik. Hello,
Yes, sir. Yes, sir. Yes,
okay.
yes, sir. Yes, sir.
Charvik,
Yes, sir.
Charvik,
Sir,
can you
will
hear
do,
me?
sir. Yes, sir. You continue, sir. You continue, sir.
This is 6:25. I can push on for 10-12 minutes more.
Yes, sir. Yes,
Yes.
sir. Yes, sir. You can.
Okay, okay, fine. So now, so in my view, any vouchers, these kind of vouchers are concerned. First of all, there is no transaction of supply or goods. There is no intention also, and in my view, there is no Sodexo Supreme Court decision is there, and we can rely upon. That's one. The second thing is that, in my view, there cannot be tax on it only at the time of redemption, unless it is specific. It's fine. Then there is a tax, but nowadays there is no tax on advance of goods, only for advance of some service industry. Somebody is there in service industry, and if they give voucher, and then for any money received in advance for service to be provided, you need to pay tax on advance. So that type of supply do happen if there is a specified service. But if it is for goods, in my view, there cannot be. So I don't agree to that. There is no tax on the voucher whatsoever, in my view. Now, pure agent concept is one. I think I'm not going in detail, but there are still 5-6 interesting issues left out, which I would like to cover in next 10-12 minutes. Now, pure agent is concerned. I think we have already dealt with it. Very important part in pure agent is concerned. The liability, whenever pure agent is making any payment, the prime liability should be, he should be making payment as a conduit. Okay, the liability should be that of principal, and there should be contractual understanding or agreement between principal and him that you will make payment on my behalf for the goods and service which actually will be used by me only, not by pure agent. Pure agent will not, like ROC fee you are paying, etc. That is being explained over here in the relevant rule. Now with this, we'll go to issue number 4. There is a APMH LLP who are in the business of builder developer, and due to this COVID pandemic, which has seriously affected their business, everybody's business is affected. They were selling the flat in Ghatkopar residential project there, and in the month of January, it was 20,000 rupees per square feet plus 5% GST they were charging. So these only flats were there in their project. Now, in order to combat the recession effect, because post-COVID is tough time, so going forward, they have announced the price from October 2020. It will be 18,000 rupees per square feet plus 5% GST in the same project. But simultaneously, they have also given one more offer to the customer. Those who want to pay at the rate of 20,000, the entire interior work will be done free of charge within that. So interior work will also include kitchen, woodwork, furniture, in other things, etc. The furnishing of the flat, and it will be done free of cost. Actually, free of cost as a layman's language, but it is roughly 2,000 is a difference. So we can say the consideration of additional 2,000 is included. So either you get 2,000 rupees discount as compared to current price, or within the same price you will get some extra amenities or extra benefit. That is what the niche issue here. Now the question comes is here, in this case, the department has issued show cause notice to them saying that you are paying 5% tax on the as a builder, that is fine, but after October whosoever has booked at the rate of 20,000 rupees, that 2,000 rupees amount के ऊपर you cannot pay at the rate of 5% because it is works contract. You are their contractor, you will be doing furnishing, etc., with material, etc., and which is nothing but a service liable for 18%. So what you do is department alleging them that post October, whenever transaction happens, on 18,000 you pay 5% and on 2,000 you pay 18% tax. The company seeks your advice. This question actually APMA themselves in reality are advisor in indirect taxes, but here they are seeking our advice. Fine. Now the question comes here that let us try to understand how many supplies are there. Again, repeatedly I am telling you the sorry. Hello. Hello. So how many supplies are there? First, try to understand they are builders. They are only, their business is that of selling the property, nothing more than that. And the customer is also looking for the property, that is house. Okay. Now only it is a different type of house. One is a unfurnished and one is a furnished house. Okay. That is what two things are coming up. You can place. But in any case, 18,000, if I want to put it in layman's language, the prices are concerned 18,000 for unfurnished and 20,000 for furnished. In layman's language, that can happen. But at the end of the day, what is a product? It is a house only which is coming up, okay, and which is a service for the purpose of GST. And there is no question of contractor contracting, nothing. They have agreed upon, okay. So then, like you go for buying a shirt in a boutique store, first you get a shirt and then also ask him, I want some embroidery here and there. So there are not two separate service, that of embroidery and this thing. What ultimately you are buying is a shirt, designing, etc. is your choice, specification and the offer. So in this case, 2018% contention will not work. And this is recently pre-COVID, we have received one show cause, or rather we have opinion on such kind of matters. And the department is already alleged, but mind you, that was in pre-COVID regime, because the industry is not doing well for last couple of months. So in my view, there is only one supply. There is no two supply happening. An entire transaction, in any case 18,000 or 20,000, the rate will be 5% as the case may mean this. The next issue is A Limited is in the business of manufacturing ready-made garment. It has a manufacturing unit at Ahmedabad, Bangalore and Mumbai. There are 3 units are there. It has a registered office at Mumbai. They have obtained 3 separate registration in 3 states, Ahmedabad, Bangalore and Mumbai. Finally, in Mumbai, they have 2 premises. One is a factory, that is manufacturing unit, and one is the register office. But they have taken only 1 number for Mumbai. That is possible within 1 state, 1 number is permitted. So they have 4 places, 3 manufacturing unit, 1 register office, and 3 numbers are there. Now they have various expense. This is the turnover approximately for every state wise, etc., etc. Here the question is that there are various common expenses are there. And those common expenses I have taken 2 or 3 only. One is the tax consultancy fees are there. So that is obviously paid by, all these common expenses are paid by head office only from Mumbai. So tax consultancy is there, director consultancy is there, auditor remuneration, etc., or rent of the head office is there. And on all these transactions, GST is being charged. The question is coming up out of this thing. This is at head office, and head office, from head office there is no supply happening. Okay, so now the question is about the credit, etc. That is what, but our issue today's topic is only on valuation. So I am not talking about the credit. The question comes is whether HO is required to cross charge and recover the common expense from the branch, and that is what the valuation. So in my view over here, of course we have Columbia decisions on that part of it, and which are advanced ruling, sorry, of Columbia Asia Hospitality is there. We'll first see what is advanced ruling say, and then what is my view also on that. That also, yeah. So this is of 2018 Karnataka advanced ruling appellate decision is there. Activities performed by the employees at the corporate office in the course of or in relation to the employment such as accounting, other administrative and IT maintenance for the unit located in other state shall be treated as taxable supply. So what is more important coming out here is your employee of one branch to whom you are making big payment of salary, but actually they are effectively to some extent contributing or working for the other branches like accounting, administrative, IT, etc. That means there is an element of supply happening between two units, and that must be cross charged by you, and that is a tax supply under entry 2 of schedule 1 to section 7. So this is a supply, and when it's a related party distinct person, sorry, so distinct person, you will have to go by that rule, that is 15(1) will not be applicable, so you need to cross charge it. Okay, only good part is concerned, whatever amount you charge, that second proviso will help you because it is distinct person, whatever value will be acceptable, but you need to do it. That's one. The second, it has held that employer-employee relationship is more important. Held that employee-employer relation is to be viewed separately for every registered unit. So your Bangalore employee will not be employee of Ahmedabad branch. That is what they are trying to say of the business entity. Therefore, in the instant case, service of employee at the IMO, that is insofar as they are benefiting the other registered unit of appellant, are to be considered as supply of service by one distinct person to another by virtue of entry number so and so so and so. Now this is quite, I am not agreeing, because when you are employee of say one company, if this company has got 10 branches, it is not that you are employee of one branch. Actually, you are working at that branch. You are placed at that branch. Your appointment letter will be qua company. Your liability, all everything will be qua company. It will come up. Of course, you are stationed at one place, and as per your appointment, you may be shifted from one place. But anyhow, this is the advanced ruling. It talks that you are a separate employee qua branch you are. The third is what and how the value of such supply made by to their branch office be established. Rule 31 provide that where the value of supply of goods services or both cannot be determined at 27 to 30, same shall be determined using reasonable means consistent with the principle and the general provision and the provision of so and so, provided that in case of supply of service, the supplier may opt for the rule so. Now, you say how I should value. I told you when the transaction most important here is between the distinct person, you have a second provision is almost there to save you. So any amount you put has to be accepted as the market price because both are getting ITC of the recipient is getting full ITC of the same. So that is now here question may come if there is a part ITC, what to do? Yes, that is the next issue coming up. So identify some reasonable mechanism on that part of it to work out this thing. But in my view, still full ITC has to be understood. You are eligible to get ITC. Full word is concerned doesn't. I will say that one has to dilute. Not the full means 100%. If you are eligible for ITC, that then more important is concerned. You should be eligible to strict interpretation. One can give to that extent. The next is expenses incurred by HO, cross-charge mechanism for allocating other expenses on the basis of proportionate of turnover, whether that will work or no. So it has held that ITC on the GST paid on the receipt of services or goods from a third party by the IMO can be availed by IMO only if there are certain services commonly used by all distinct persons. Then ITC can be distributed to all by the unit of ISD route only. Like suppose here auditor has provided services, tax consultant has provided services, all those. Now actually speaking, those are all the services availed by all the branches, but it is being billed at head office and the entire money is paid at head office, so entire credit comes to head office. Now in that scenario, you cannot charge to other branches because there is no supply happening from one branch to another. Actually, it is a distribution of expenses, and distribution of expenses in our case, if you recover, then also ultimately for all accounting purpose, tax purpose, it will be consolidated except the GST purpose. So here cross charge in that case will not be working, but you need to distribute the credit. ISD route is compulsory. So what you can charge is when there is an involvement of some supply by one branch to another, then only you should cross charge, not for distributing of your cost like auditor's fee, consultancy fee. That has to be by ISD only. That is what. So there is a fundamental difference between concept of ISD and cross charge, and that is being explained over here. So this is what the Columbia. In case of a cross charge, there is an element of service rendered by person. So like employee of one branch is working for another, then only you can do it. Otherwise, ISD is the only route which will be available for you to do it. So some in this advanced ruling, certain things are acceptable or rather barring one or two issues. So in this, our issue is concerned, yes, you need to distribute the credit. Cross charge is not possible in all these things. So in our example, there was consultant fee, auditor fee, renting, all those things cannot be cross-charged because there is no element of services being provided by one branch to another. So that will be by way of only distribution. The next issue, last two issues are left out in this thing. I think we are at 6:39, so another 3-4 minutes. There's a Max Limited who is in the business. This will be more related to our post-COVID issue will come. This we will be facing surely in the time to come. They are in the business of selling of computer printer. You can put any item. They were selling certain model of their printer to the distributor at rupees 8,000 and plus GST. And in turn, the distributor was selling at rupees 10,000 plus GST. That was a normal deal was going on, and 2,000 distributor was earning. Okay. Now here I have given due to technology upgradation, the existing stock of printer has become unsellable at the end of the existing price. Now the dealer has got some stock, shops are closed for so many days, so his price have reduced. Okay, and there is technology. By the time technology is gone up, he is able to sell only for 7,000 rupees. Now he purchased it for 8,000 and he was to sell at 10,000. And how can he afford? So I'm sure such kind of agreement they will be there, and they will have the understanding with the dealer and the company. So here in our example, the company said, yes, I understand. So you keep selling at 7,000, and thereby I'm sure you will lose 3,000 rupees revenue. I will compensate that revenue which you are otherwise giving as a discount to customer. So post COVID, they say started selling at 7,000, but there is no damage. The loss of 3,000 will be borne by the manufacturer. Otherwise, it will become dead stock for them forever. The loss of 3,000, that's why it is made good. Now department will, now these 3,000, there can be different way in which they will be making. Either they will pay the check or they may adjust against some other price, credit note, whatever. The department would like to tax it, saying that nothing but this is nothing but your 3,000 will be liable for GST. First of all, market price 10,000 you need to charge to the customer, pay the GST on same, and over and above you are getting a 3,000 which is incentive. On that also you pay, which is the element of service. Perhaps these kind of notices or anything may come. Now to support of that, we have got 1 or 2 AR, and then of course I kept on telling I don't rely on AR, but still how department's thinking is. Kerala AR is there. We say that any such discount is given, which is an additional discount, and which is in the nature of reimbursement to the applicant of loss. Here there is a reimbursement to take care of the damages or offer some special reduced price to the distributor. The same amount represents the consideration paid by supplier company to the distributor for supplier of goods by the distributor. It's a consideration paid for supply of goods. Just try to understand what I was arguing or rather explaining it. It is nothing but reduction in price, but advance ruling say it is nothing but consideration paid by the manufacturer to the dealer for supplying the goods to consumer. The consideration is always for some supply. So therefore this additional discount reimbursed my supply to the distributor is liable to add it to the consideration payable by the customer, and GST will be payable on entire amount. Now that means the content department show cause which I have stated, based on this fact they will, or advance ruling, they will simply issue the show cause. In my view, that is not a correct this thing. I will further say that it is nothing but a reduction in price. You may not able to reverse the credit of your GST because of the time limit expire, etc. is fine, but still it can be a financial credit note. You can always book in the account by way of reduction, and GST will be charged only on 7,000 rupees because that is price is the sole consideration. Section 15(1) will be applicable, and it may be possible that the dealer has paid more GST while purchasing at 8,000. So there will be some extra GST credit may be available, maybe, and that he can offset again. There is no question of refund to them, but they will be able to adjust against other demands. Selling the product at a lower price, you don't lose the GST, mind well. There is nothing inverted structure refund, etc. in this case. Now the next is issue number 7. Bhavan, only 2-3 minutes more. The Charming developer is a work contract service provider. They are engaged in the construction of a new factory of API Limited. API Limited want the entire new building to be constructed for them, and total contract value they are allotted is 60 crore rupees to Charming developer. The contract value excludes the value of steel and cement. So when the contract is executed, that time only it is agreed that 60 crore is consideration, and cement and steel we will provide you, and they have used the word free of cost. That means it will be supplied by the customer API. The developer is correctly, that is Charming developer has paid 18% GST on entire contract value, 60 crore rupees as a works contract supply. The department issued show cause notice saying that you need to add the value of cement and steel, which is provided because construction cannot be completed without that, and it is a consideration paid to you toward the supply. Had your contract would have been included of steel, cement, it would have crossed 80, 100 crore as the case may be. So you pay that, and free supply has to be added. That is what it is in term of section 15(2)(b). This is a show cause notice coming from department. Now, what is the view? They seek your advice. Now, in that 102 advance ruling, and then my view on that. In the case of Maharashtra, of course, the facts are different. I will also let you know. You try to understand. In our case, I have told that contract was of 60 crore only. It is upfront known that all the material by the charming developer except cement and steel, and 60 crore is the value. Now here there is another advance ruling of Tejas Construction in Maharashtra reference I have given. Here also they have entered into the similar kind of the agreement, and their cement and steel was provided. But the terms of the contract, as I have gone through the advance ruling, it states that the recipient of supply will make a deduction for steel and cement from the bill. So bill was always for gross amount, and cement steel value whichever supplied free of charge by the client was reduced from the bill. So then the wordings are completely different, terms are completely different, hence the tax will be payable on the gross value only. In my view, there is no free supply over here, because supply was all, accountability was already there on the contractor for entire amount, only the deductions being made. So that is some different, but this is what the another is of Navodit Agarwal Chhattisgarh advance ruling is there. Of course, this is not vis-a-vis builder. In this case, what has happened is there was a transport contract. The transport service was supposed to be provided, and on the tax was charged on a forward charge basis by the transporter to the recipient. But only contract was that the X amount will be paid by the recipient of supply to the transporter for transport service, but they will be giving a diesel free of charge. So diesel, so transport charges are net of diesel. They seek advance ruling. The department, so value of diesel is must for you to provide the transport. Without diesel you cannot run your vehicle, and which is required to provide this service, hence it has to be included, and free supply. These are two advance ruling which where says that of course the facts are not absolutely at par with it. It's a quite different, but then free supply, how department is trying to interpret. What is my view on take is this is concerned? You go to section 15(1), you have gone through. It is a consideration which has been charged. So what I have charged in my case is 60 crore only. Parties are not related, so I need not go to rule. The cement and steel are concerned. Yes, I understand construction can't be done with cement and steel. We appreciate that. That's fine. But what is the amount I have charged for you is concerned is for the work. My contract is only for 60 crore. In past we have got a decision of Bayana Builder which is upheld by Supreme Court. Of course the provisions are concerned that the term consideration has a definition, some notification 15 was there. So all those things were, but a free supply was not part of the value that Supreme Court held under the service tax regime under section 67. The section 67 consideration definition got amended in 2014 from 14th of May. But even post 14 May also there are decisions saying that free supply will not form part of the value, because what is taxable is a value charge for such service provided. So what is my service provided? Here what I am doing is a services of works contract I am supplying. So for that what is consideration is 60 crore. Whatever I am getting over and above is similarly there is a Jai Hind pipes case is there which is of Ahmedabad tribunal. There it was pipe laying was done and value of pipe is to be included. There also it has said that the pipe is, it is an activity done on the pipe. You are giving me pipes, pipelines I am laying, and for that I require to construct some cement and steel etc. With the help of that some base I have to create a stands, and pipe will be laid on that, but pipe will not form part value of the contract. So friend, that is what the issue. Free supply in my view not to be added. Of course it depends upon how you have worded the contract. There is another issue, Jain Irrigation, the last one of the day, which is located at the Nasik in the business of manufacturing supply of pipes and micro irrigation system and its accessories. They received a contract from their farmer Charmik Momaya for installation of some irrigation system. Now their system are related to irrigation, so all farmers are their client, and they got one contract from Charvik for 50 lakhs rupees. Now the state government has, in order to promote this micro system, has announced a subsidies, and that subsidy state government is giving only to the farmer. The farmer who is eligible based on various parameters. If they install, then 80% subsidy has been given by the government, state government, Maharashtra state government in this case, for the irrigation. So in view of that, Charvi Momaya applied for the subsidy to government for this thing, and government sanctioned 40 lakhs rupees. So then the Charvik has conveyed to the Jain irrigation, you give me bill only of 10 lakh, 40 lakh, government will pay you, because there is an option available in the scheme. If Charvik says that I am installing that, and he can insist government directly make the payment to vendor based on the quotation. So payment you will get it, and I am just paying you 10 lakhs, so you charge me 10,000. So this the disbursement of subsidy of 40 lakhs shall be made post the completion of installation of micro system and receipt of consent by Charvik. They will release it. Now the Jain irrigation is in trouble. What to do? Whether 50 lakhs or 10 lakhs? Jain irrigation is concerned, they raise the invoice of 50 lakhs. Charvik says nothing doing. I'll not pay GST. Only on 10 lakhs you charge, and 40 lakhs from government because it is subsidy. Now, this being the case, they are seeking your advice, and the section relevant is 15.2e. In the beginning, we have seen what is to be included in the value. 15.1 is a main, and then 15 subclause 2 is what all to be added. In that, one of the point is 2e says that you need to include all the subsidy except the subsidies which are granted by state and central government. Okay, that is a section. So now here this subsidy in our example is coming from the state government, and that is to be excluded. That is what is Charvik's contention. So that's why he said for valuation में से तुम ये deduct कर डालो. Now you read the section first of all. 15.2 section never tells you to eliminate anything. 15.1 is a valuation section. 15.2 say what all you have to add, and 15.3 says what all you have to eliminate. In this example, Charvik is containing 15.2e says you deduct this. Gentlemen, you read 15.2e, it says you don't add the subsidy if it is provided by the state government. Now, where is the question of addition? Here the supply price is already 50 lakhs rupees. Secondly, it is not influencing the price. Only those subsidies need to be added which is influencing the price. Now suppose in this example subsidies are given by Jain irrigation to farmer, and the schemes were announced by the government, and they said that to Jain irrigation, look, you are selling every system for 50 lakhs rupees, you please sell it at 40 lakhs to farmer, and I will pay you 10 lakh rupees means to Jain irrigation for each system based on your invoice. So in that case, what is happening is farmer will be paying only 40 lakhs rupees to Jain, but Jain knows that he is going to get 50 lakh, 10 lakh rupees is coming by way of a subsidy. But because that subsidy is coming from state government, it is not to be included. But if it comes from any other but then this thing, then his value of supply will be straight 50 lakhs rupees. So 15.2 is nothing but for addition and not for elimination. And the advance ruling in the case of Karnataka AR is on the same line, Mega Agrotech Private Limited, and it is explained very much in that case. There is no need, you will not to deduct, and tax GST will be payable on the entire 50 lakhs. My apology for exceeding the time, but I would like to thought of covering everything. Thank you once again to the organizer for having given me opportunity. Any issues, if at all time permits, I'm available. It's all the decorum of this thing. Charvik, if you want me to address, then you say yes. Otherwise, I'll stop. Thank you very much.
Yeah, sir, some questions are given. You can address it.
Yes, sir. Now, one question is one minute. One is valuation in case of a redevelopment project for existing member getting old area plus additional free area. I think he is asking from the perspective of the builder, where thereby existing member is there, is getting the old area. In my view, in this case, it is of course a specific industry wise. Nearest market price of the property you will have to find out. It's not a fully barter. Secondly, free area means there is no consideration coming up. It's a full barter in this case. And full barter, whenever transaction is there, you need to go by the rules and the market value, nearest value. There is a notification also available of March 2019, and that will be the price at which value on which you will have to pay the tax on that. What is the value of GST in case of development agreement in case of a builder? Development agreement, what are the facts you need to tell me, gentlemen? Then based on that, I'll be able to tell you what is this thing, because what exactly is the contract. Normally landowner and the builder, they enter into a contractual obligation, and landowner gives some development right, In turn, the builder's responsibility is to construct the building and allot say 20, 30, 40% of the constructed area. So on the entire whatever 20, 30, 40% area is there, commercial residence based on 1%, 5%, they will have to pay the tax. And the value is concerned, again the same, the market price nearest, because these are barter transactions, and that notification of March 2019 will come into play. As regarding the tax under reverse charge on the development, it's a very contentious issue. Notification says that it is to be charged. Sorry.
Raju sir, we
Hello.
can avoid this question because this is a total subject in itself. We
Fine,
can treat
fine.
it separately.
Fine. Then next is please throw some light on valuation of goods exported. GST paid on CIF or FOB value. See, you are paying. I am sure on first of all, export is a zero rated, but still this gentleman has opted to pay tax on exports and then claim the refund. That perhaps is the this thing. In my view, it should be on the CIF value. You have to make the payment of the GST on that. There will be an anomaly coming up when you claim the refund. I think the portal is asking for FOB for the purpose of refund, but it will accept whichever is a lower. There is an anomaly on that, but the liability is concerned. Value is when your section valuation section is very clear whether it is export or local. It's a valuation of supply or contract CIF, so it is a consideration by all means. Then when the time of supply is a date of redemption of voucher, but if the voucher is expired and not redeemed, will GST be applicable? Here the question is concerned. I told you I already dealt with this. I gave you the Kapil Doshi purchased voucher, and he is a rich person. He has not redeemed that voucher. So of say 1 lakh rupees. So the voucher is expired, so it becomes income of Kalyan jeweler. In that case, there was no supply happening whatsoever. That was never a transaction of supply of voucher. It was only redeemable against supply of ornament which ever happens income of Kalyan jeweler without any supply being happen. You might well income is something different and different. You can have income even without there is supply. So there is no question. In my view, no GST is payable on this. I think so far so good. Only these many issues have been made. Anything more you can for me. Otherwise, thank you. We have extended a lot on this, and thanks to one and all.
Yeah, Rajiv bhai, thank you. Anyone has question can directly ask. I think so, Rajiv bhai, we have a time of I think so 4 to 5 minutes. So anyone has question?
Okay. Yeah, you can.
I think so. That's enough for today's session. Thank you, Rajiv bhai. Rajiv bhai, we only know the valuation under the GST will be charged on the transactional value. Is that price actually paid for the supply of goods? But here yourself has wider the definition with the wonderful case law of the Tata and others. Also, the advance rule is very wonderful. We have the eight advance rule you have covered. I think so. The case laws. Such so when the price in a money defined under the that's a valuation does not widen its meaning, but in the some cases where the price is money is silent, like a partial consideration and the barter deemed supply under the redevelopment, where valuation take a much more serious issue than any other law in the GST. So Rajiv bhai, one of the golden speaker has explained with the help of case law and as how the rules of valuation can be widened further. This is only the Raju bhai. We know you are only. So this is only the formal thanking you on behalf of the member to taking this session as interesting and hold each and every one as a learner in the GST. We can say Raju bhai, thank you very much, and thank you all the participants to be a good listener. Now we conclude the session for the today. Raju bhai, thank you very much for this.
Thanks to each one of you and to the organizer for having the opportunity. I am also part of GST group, and because of you all near and dear friends, I had some courage to lead this session. Thank you for the support.
Another session, learning session was there on the Tuesday, 5th May, 5 to 6:30. There is an issue of Schedule 3 of Companies Act by Mamta Sheth. Very helpful during the preparation of financial and companies. So friends, any queries issue can be first you WhatsApp to the Charmik Bhai or Bhavan Bhai for the session. That will be a forward to the speaker that can be considered within the session. Thank you all for being a good learner. Thank you very much.
Thanks, sir.
Thank you. We are closing the session, sir.
Yeah.